Alrighty guys, welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about the top stocks that I am buying in June. We are only a couple of days out from June, another month, and I always think it's smart to go into each month with some sort of strategy. You never want to go into it blind or empty-handed. You always want to come in with a little approach just to have a little edge over other investors. So the very first stock that I am going to be adding more of is ticker symbol KO. This is also known as Coca-Cola. Now you will notice that a couple of my picks are more value stocks. And the reason why that is because of the market volatility and all that stuff. We all know over the past couple of months, the general market has just seen crazy sell-off. And normally when this happens, value companies tend to perform better than growth stocks. So as you guys notice, this thing does have an absolute beautiful upward trend, which is amazing. And from January all the way till now, we have this great growth, right? Comparing it to the general market has actually sold off about 16%, and this has actually gone up about 3 to 4%, which is beautiful. So you're going to be getting some decent growth. On top of that, their past earnings came out way better than expected, which is awesome to see. They brought in about $10.5 billion, and you guys are going to be getting paid a dividend of 44 cents. So this is a company, you don't have to worry about them closing the doors anytime soon. They always do very, very well, and they are a dividend king. So they're a company that's been growing their dividends, and a company that you guys can pretty much count on to continue to do very, very well, whether we're having a bull market or a bear market. Moving on to stock number two. Stock number two is very similar to Coca-Cola, Johnson & Johnson. You know, this is another value company, a little bit more volatility than Coke, but as you guys notice, you know, from January right now all the way up, does have growth comparing it to the market, which has seen sell-off. Their past earnings here was decent. They brought in about $23.4 billion, missed it on the revenue side, but hey, that's going to happen, especially when you deal with Johnson & Johnson, you know, more of a medical company, and given that we've seen some sell-off from the medical sector in general, just because of all the lockdowns and everything like that, when it was peaked out, now we're starting to get some sell-off from it. But that's completely fine. Dividend of $1.13. You cannot go wrong with this one, and one that I am going pretty heavy in, actually. Moving on to stock number three. Stock number three is, I can't make a video without this company, Tesla. I've been buying this stock for such a long time, and I think this is an absolute no-brainer investment under $800. You know, the average analyst price target is $985. So if we are completely wrong about Tesla hitting $2,000 and we're right on all of the analyst price target, that's still a return of about 35%. So you cannot go wrong with that. Past earnings beat expectations, you know, but this one's going to see volatility if we get sell-off in the market. Normally growth stocks like Tesla will get sell-off if there is unshakiness or volatility in the market. People want to pull money from risky investments and move it into more value companies like Coca-Cola, Johnson & Johnson. But moving on to our next one here. Our next one is ticker symbol NVDA, the one, the only Nvidia. Nvidia has been seeing some sell-off here since the highs at $346. It released some earnings, right? Did very, very well, plus a dividend of about 4 cents. Good earnings, as you guys can see. Another dividend. And then their past earnings here, if we actually zoom in, you can see it a little clearer. Did very, very well. A nice surprise on the revenue, $8.2 billion with an EPS of 1.6. What that means is they're doing very, very well. They're bringing in income. Their earnings per share is relatively understandable. But given that we've seen some sell-off from the highs, I definitely think that graphics cards, computer parts are not going away anytime soon. So this is one that I am going pretty heavy in as of right now. And if you guys look close, you'll notice that it's actually right on this support line. So either we could have two things. We could have this old support start acting as new resistance, or we can get a resistant breakout. So I think we'll get a resistant breakout from 189 to probably 204 to 210. within the next couple of months. But this is one for sure to dabble in this month here. Moving on to the next one. This one here is just the general market, right? We've seen some sell off from it, so it goes without saying you always want to buy when the market is selling off. And if we get some more sell off, just buy more, buy as much as you can. This is, pretty much like investing in the US economy. Do you guys think we're going to close our doors and, just be a terrible economy for the next 100 years? No. If you're a long-term investor like myself, the market goes through stages. If history taught us one thing is history repeats itself. And we saw the 2008 crash. We saw the 2020 crash. And if we have another crash, that's fine, because understanding the long-term outlook, these crashes and sell-offs just bring opportunity to buy in at more affordable pricing, and you guys can make a lot more money. But the next one here is one that I've been buying for a little bit, but over the past couple of months, I've gotten hit pretty hard with one of my favorite stocks here. It's ticker symbol HD, Home Depot. They bring in a lot of money. They brought in $38.9 billion. It's a great dividend paying company. I understand they're not going to close their doors anytime soon. I definitely think we'll slowly start getting a turnaround back up to some highs here at about 330. But that goes without saying. We could see this kind of stay in this price zone for a while. And pretty much how the market and the housing market has been over the past couple of days, I definitely think we will see some correlation with Home Depot. Just because historically, when housing's doing very, very well, people want to keep their houses updated. They want to get new cabinets, keep their, yards maintained and all that. But anytime we see a recession, people focus on things that need attention. And given that you don't need a new bathroom or a new kitchen remodel, we could see Home Depot see some volatility. But like I said, that always goes with stages. This could be an absolute great stock for the next couple of years, but we could see some volatility from it. But the last and final one, now that we got all of the value companies, some decent growth stocks, now let's talk about high risk, high reward. Ticker symbol GME. Gamestop. We've seen some sell-off from it, right, as you guys can see, but they have been doing some pretty cool things in the crypto and NFT world. They created a whole NFT marketplace, doing some pretty decent stuff. The only things I don't like is their past couple of revenues have not been up to par of what I would like to see them. But on the next one, we do have an earnings next week on this. So I definitely think that this one could see some sell-off just because retail in general has been hit very, very hard. But if we see that sell-off, that could bring some opportunity. As you guys can see, it hit that trend line and just got some natural sell-off here. So personally, I think that this is a fun stock to have. It's way under 1% of my portfolio, but I think it's fun to have, guys. But overall, that is it. These are some top stocks to buy. Hope you guys enjoyed it. If you did, hit that like button, subscribe. If you have any questions, ask them down below. But we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care, everyone.